Welcome all. Now we are going to see the amendments for CA Intermediate Jan 25 exam related to GST. So as I already told you, lot of amendments of September 24 have been merged into Jan 25 amendments. We have only few amendments for Jan 25 exam. And so we are going to see, this is the statutory update which is released by ICI. In that, the first one related to supply under GST. As we all know that there is specified actionable claims now which are covered under supply and all other actionable claims are excluded from supply. What are those specified actionable claims? We have HC block, H for horse races, C for casinos, B for betting, L for lottery, O for online money gaming and G for gambling. These are the specified actionable claims. O for online money gaming, not online gaming. There is a difference between online gaming and online money gaming. In online gaming, we spend money to play the game. That will not come under specified actionable claims. That will be treated as OIDR services, that is online information database access and retrieval services, whereas online money gaming will come under specified actionable claims. So that's what they are telling here. So casinos, horse racing and online gaming excluded from the purview of Schedule 3 to clarify their taxability. So earlier, before, if you see, actionable claims other than lottery, betting, gambling is excluded from supply. That's what they are trying to convey here. Earlier, only lottery, betting, gambling were excluded. But now they have decided that actionable claims other than specified actionable claims is excluded from supply. So what are those specified actionable claims? So this is the specified actionable claims. HC block, horse racing, casinos, then B betting, L for lottery and online money gaming and gambling. This is only covered. And what is the meaning of online money gaming? So when we deposit some money or virtual digital assets like cryptocurrency etc. to play the game, and that game may be a game of chance or a game of skill, and wherein the outcome so is our return like winnings. Sometimes there will be losing also. So online gaming in which players play or deposit monies or money's worth, including virtual digital asset in expectation, that is important, in expectation, in the expectation of winning money or money's worth, then only it will become online gaming. And again, whether or not the outcome or performance is based on skill, chance or both. It may be a chance game wherein you don't know what is the outcome, or using your brain you need to play. So that is a game of skill or game of chance or game of both. Okay. Then virtual digital asset means it is like cryptocurrencies or non-fungible tokens etc. Using that also we can make the play. And sometimes what will happen, we will recharge and get some credits. Using that credits also we can make the play of the game. Then online gaming is different. Online gaming will not come under specified actionable claims. Online gaming is just spending money like PlayStation games, online games like Minecraft or some other games like GTA game where we spend money to play the game, that will be coming under online gaming. Even mobile apps also, mobile games also, lot of mobile games we spend money to play the game, that will also be coming under online gaming. So that is about this. And here with respect to this casinos and other things and all, valuation, we have a separate valuation methodology, but that separate valuation methodology you will be learning at CA final level. So they have not given it inter level as to what should be taken as a valuation in case of this specified actionable claims like lottery, casinos and other actionable claims. Okay. Then next amendment is related to food and beverages supplied in the cinema hall. So three scenarios you need to remember. Scenario number 1, you book the ticket, thereafter you go to the cinema theater and you purchase the food and beverages. Cinema ticket 28%, food and beverages 5%, no doubt. Number 2, you will be booking the cinema ticket in Book My Show or some other apps, and immediately after booking the ticket, booking the seat, there will be a screen for food and beverages. You can order directly, the food will come to your seat. So in that case also, theater, that is cinema ticket 28%, food and beverages 5%. Third, there are some private theaters or some preview theaters or some selected theaters, premium theaters, wherein Now, when you book the ticket itself will be somewhere like 1000 to 1500 rupees, wherein as a part of the ticket they will be providing some complimentary food and beverages, maybe one popcorn and one coke or one beverage could be given. In that case, what will happen? In that case, the ticket is 28%, cinema ticket 28%, whereas food and beverages will be 5%. These two will come under naturally bundled in the ordinary course of business, and we need to take the rate of principal supply and apply it on the entire transaction. Okay. So accordingly, so what will happen in this case? So the rate of GST of the principal supply may be taken, that is 28%, may be applied on food and beverages provided it fulfills the conditions of composite supply. What are the conditions of composite supply? All are taxable, naturally bundled in the ordinary course of business, and the principal supply is identifiable. So that is this. So supply of food and beverages at cinema hall, taxable as restaurant service only, and restaurant service as long as food and beverages are supplied by way of or as part of service and supplied independent of the cinema exhibition service. But where the sale of cinema ticket and supply of food and beverages are clubbed together and such bundled supply satisfies the test of composite supply, those three conditions, then we will take the rate of principal supply. What is the rate of principal supply here? That is admission to theatre. So that will be taken as the principal supply, and that will be applied. That rate will be applied on the entire amount. And whether the price is single or separate, that is irrelevant. For composite supply, price is not a criteria here. Only those three conditions should be satisfied. Next, clarification on liability to pay GST in respect of warranty replacement of parts and repair services during warranty period. So what happens is that in case of warranty, say for example you purchased a car, and immediately after some 2 months in that car the parking sensor is not working. When the parking sensor is not working in the car, you will take the car to the service center, and in the service center, so they will replace the sensor, the parking sensor freely, because it is covered under warranty period. Now that parking sensor needs to be purchased, and can they take ITC on that? Yes, they can take ITC on that, even though they are not charging any consideration to the recipient, because it is replaced during warranty period. They are not charging 1 rupee also, but still they can enjoy the ITC and don't invoke 71C. 71C says disposal of business asset on which ITC is available, and that point will not be applicable here because the circular says that there is no reversal of ITC. Moreover, the blocked credit point, that is if inward supplies are purchased and distributed as gifts or free samples, ITC not available, like that one point is there. Even that point also not applicable in this case. Okay, even though we are giving it as free, but the objective here is that it is not just free, already a product has been sold, in that on the part GST is already paid. So therefore when we are replacing it, so don't bring it under free samples or gifts. So ITC is not disallowed, ITC can be enjoyed. That is this. There are cases where the original equipment manufacturer, for example car manufacturer, offers warranty of goods supplied by him to the customer and provides replacement of parts under or repair services during the warranty period without separately charging any consideration at the time of replacement or repair service. Whether GST would be payable on such replacement of parts or repair service without any consideration from the customer as a part of warranty. So GST will not be payable. Why GST not payable? So see this. So here where the manufacturer provides replacement of parts or repair service to the customer during the warranty period without separately charging any consideration, no further GST chargeable. Okay, GST not payable. However, if any additional amount is collected, now what will happen? Say it is not parking sensor, some other part which is a depreciable part, like some air filter or some other part which is depreciable in nature. Now after 3 months, when they are replacing that as a new one, so they will ask, sir, last 3 months you have used it, so you need to bear some cost. We are replacing new. One part we are replacing new, correct? But you need to bear some cost because for the last few months you have used it. So due to that reason, what will happen? 3 months, say 10% is depreciation, and 10% of the cost you need to bear, 90% of the cost the manufacturer will bear. Now in that case, if the part value is 15,000, they are charging 1500 rupees from you, that 1500 rupees will be treated as consideration and it will become supply under 7(1)(a). Okay. However, if any additional consideration is charged by the manufacturer from the customer, either for replacement of any part or for any service, then GST will be payable on such supply with respect to such additional consideration. That will become supply under 7(1)(a), but only to the extent of what? Additional consideration, that extra amount that is being collected. Then, second issue, whether GST would be payable on replacement of parts and or repair service provided by a distributor without any consideration from the customer as a part of warranty on behalf of the manufacturer. Now, first one is in the context of manufacturer who is doing. Sometimes the distributor also will do the replacement. Okay. Example, you purchased a torch, one rechargeable battery operated torch, and this torch, when you purchased from the shop, from electronic shop, he is a dealer, and it was working fine. When you took it home and you did the recharge, next day it is not working, and therefore immediately you took back that torch to the dealer, and what dealer is telling, okay sir, so you have purchased it yesterday only, don't worry, this you keep it, I'll give you the new one. So he gave the new one. When he gave the new one, in this case, whether he need to pay any GST on the new ones? No, because already for the old one, GST already paid. So it is just a replacement. So due to that reason, GST is not payable. Got it? So there may be instances where the distributor of a company provides replacement of part or repair service to the customer as a part of warranty on behalf of manufacturer, and no separate consideration is charged by distributor in respect of the said replacement and or repair service from the customer. No consideration is involved. So due to that reason, no GST will be payable. However, if they say, sir, you have to pay because it is a different item, different model, you have to pay some extra amount like that, then on that extra amount, GST will be applicable. If any additional consideration is charged, then GST will be payable. So literally, issue number 1, issue number 2, the explanation is same. Issue number 1 is in the context of manufacturer who is doing the replacement during warranty, whereas issue number 2, a dealer or a distributor who is doing the replacement during warranty. Issue number 3. In the above scenario, where the distributor provides replacement of part to the customer as a part of warranty, whether any supply is involved between the distributor and the manufacturer. Now, the second example, that is, distributor gave the torch, new torch, but when that new torch is given, he need to get that from the manufacturer for replacement. For replacement, he need to get that from manufacturer. In that case, when manufacturer is sending that new torch to the distributor, will it become supply in the hands of the manufacturer? No. So manufacturer also not required to pay any GST. So there may be cases where distributor replaces the part. So there can be 4 instances as discussed below. So first instance where distributor replaces the part to the customer either by using his stock or purchasing from a third party and charges the consideration to the manufacturer. Okay. Say for example, I am going back to the first example, that is parking sensor example. Now there is a car dealer who is replacing the parking sensor, and how that parking sensor is replaced, he is purchasing the parking sensor from the market from a third party and he is replacing to the customer, and say the cost of that parking sensor is 15,000 rupees. So the dealer, the service center which has paid that 15,000 and did the replacement, thereafter they will be getting this from the manufacturer reimbursement. This 15,000 they will get as a reimbursement from whom? From the manufacturer. So whether that will be treated as chargeable to GST in the hands of the dealer? Yes. So here what they are telling, so in such case GST would be payable by the distributor on the said supply by him to the manufacturer, because first he is purchasing from the third party and completed the replacement, the parking sensor replaced. Now he need to get the reimbursement. So that reimbursement he will get it from the manufacturer. In that case, he need to pay GST on that reimbursed portion. That is this. Then second instance, There may be case where the distributor raises the requisition to the manufacturer for the part to be replaced by him during warranty period. This is what Tata will do. Tata and Mahindra will follow this model. What they'll do, so they will not keep all the parts readily in their service center. So suppose if there is any part which is to be replaced, they will place a requisition to the manufacturer, and the manufacturer will send that part, courier that part, and thereafter that part will be replaced to the customer. Okay. Now, there may be cases where a distributor raises a requisition to the manufacturer for the parts to be replaced by him during warranty, and the manufacturer then provides the said part to the distributor for the purpose of such replacement to the customer as a part of warranty. Now, in such case, where the manufacturer is providing the part to the distributor for replacement during the warranty period without separately charging any consideration, GST not payable, because the dealer or the service center will place the request to the manufacturer, and the manufacturer will be sending the part to the dealer. Okay, as the manufacturer is sending the part to the dealer, there won't be any GST with respect to that, because it is given freely. Okay. And next one, see, there may be cases where the distributor replaces the part to the customer under warranty out of the supply already received by him from the manufacturer. So third scenario. What is the first scenario? First scenario, so just think of service center, car service center. Car service center purchases the parking sensor from the third party and they replaced it for the customer. Thereafter, they are getting the reimbursement from the manufacturer. Whatever money that they are getting, on that they need to pay GST. That's the first scenario. Second scenario, they are not procuring from the third party who service center, but they requested the manufacturer sending the part, and that is parking sensor. That parking sensor, they replaced it to the customer. Now there is no GST liability on the manufacturer as well as on the dealer. Now third case, already manufacturer would have sent some stock to the dealer, like say some 100 numbers of parking sensors would have been sent to the dealer. Usually, what manufacturers will do, to the service center they will be sending some inventory of spare parts. Like that, they have sent some 100 parking sensors to the service center. Now at that time, manufacturer would have paid the GST on that 100. Now what happened, out of this 100, the service center take one part and replace it for the warranty freely. So take one part and replace it for the warranty, which means the service center is required to pay to manufacturer for 100 numbers or 99 numbers. Only 99 numbers they need to pay. They are not required to pay GST for 100 numbers. They need to pay GST only for, or they need to pay to the manufacturer only for 99 numbers, because one part one parking sensor which the service center has used for replacement during warranty period is not their liability, because whenever there is a replacement during warranty period, it is whose liability? Manufacturer's liability, which the service center is doing. So therefore, they will not pay to the manufacturer for 100 units or 100 numbers. They will pay only for 99 numbers. Now that one number they will not pay, for which the manufacturer should give a credit note. First, manufacturer gave an invoice for 100 numbers. Now manufacturer should give a credit note for that one number. Thereby, the recipient, that is the service center, will reverse the proportionate ITC. So and they will pay to the manufacturer only for 99 units or 99 numbers. Got it? So there may be cases where distributor replaces the part to the customer under warranty out of the supply already received by him from the manufacturer, and the manufacturer issues a credit note in respect of the parts so replaced, subject to provisions of section 34. Section 34 is about the credit note. Section 34 subsection 2 talks about credit note. The section 34 subsection 2 talks about credit note. Okay, credit note. Then accordingly, the tax liability may be adjusted by the manufacturer. What is the implication of credit note to the supplier and credit note to the recipient? Whenever supplier issues a credit note, to that extent, the liability of the supplier will get reduced. So first, under GST, debit notes and credit notes is issued by supplier to recipient. Whenever the invoice value increases, the name of the document is debit note. Whenever the invoice value decreases, the name of the document is credit note. So here what happens? Because logically recipient will be showing debit balance in the supplier's books. So when the debit balance increases, debit note. When the debit balance decreases, it will be credit note. Here manufacturer initially raised an invoice for 100 numbers, so you would have given invoice. Now the customer, that is the recipient, the service center, is required to pay only for 99, so that for 1 unit they are giving a credit note, because of which for the manufacturer his liability will come down. Whatever is his existing liability, that will come down to that extent. Okay, for whatever credit note they have given, that credit note tax component is there na, that will be reduced from the supplier liability, and recipient would have taken on the base of invoice ITC. Now that ITC also will come down. Okay, that is about this credit note. Now first scenario what we discussed, scenario number 1, that is the service center procure the parking sensor from the third party, replace it for warranty. They are not going to charge anything to the customer, but they will get it reimbursed from the manufacturer. So they need to pay GST on the money that they got as a reimbursement from the manufacturer. Second, they will not buy from the third party the parking sensor. They will request the manufacturer only to send the parking sensor. Manufacturer will send and they will replace during warranty period, no liability at all. Third scenario, so they will be using out of the inventory what they have, and the manufacturer will not expect them to pay for that, so accordingly manufacturer will give a credit note. Okay. Fourth scenario, there may be cases where distributor replaces the goods or its parts to the customer under warranty by using his stock, same here also by using the stock, here also by using the stock, and then raises a requisition to the manufacturer for the goods or parts, and the manufacturer then provides the said goods or parts as the case may be through a delivery challan. This is known as replenishment. This is known as replenishment of stock. Replenishment means what? Replacing. So again I am going back to the example, 100 numbers of parking sensor the service center got. One parking sensor they took and used it for warranty during that warranty period. So they have replaced it during warranty and they are not charging anything. Now instead of getting a credit note from the manufacturer, they may get that parking sensor replaced. The stock inventory will be refilled. So 1 unit may be received. In that case, what is the treatment? Simple. Manufacturer will just send it under a delivery challan and is not required to pay any GST. Who? Manufacturer is not required to pay any GST. Okay, that is this. 4 scenarios. Scenario number 1, procurement from the third party, reimbursement, GST payable on entire amount. Second scenario, they are not procuring from the third party, they request the manufacturer, and manufacturer is sending, then only they will do replacement, no GST liability at all. Third scenario, so they will use out of their inventory and manufacturer issues a credit note, because of it the liability of the manufacturer will come down and the recipient should reverse the ITC. Fourth scenario, so they will use out of the inventory and the manufacturer instead of giving credit note can replace that. Again, it will be not treated as supply in the hands of the manufacturer, it should be under the cover of a delivery challan. Usually when delivery challan will come, whenever there is movement of goods without involving supply, then the delivery challan will be coming into existence. Okay, that is this. Next, issue number 4. So first issue what we discussed is with respect to manufacturer who is doing the replacement during warranty period, and next we saw that is dealer who is replacing during warranty period. Third, if dealer is doing the replacement during warranty period, how that inventory will be sent to him and what will happen, that we saw. Now issue number 4, where the distributor provides repair service in addition to replacement of parts or otherwise to the customer without any consideration as a part of warranty on behalf of the manufacturer, but charges the manufacturer for such repair services. That is, whenever the car is purchased, there will be something called as free after sale service. Free after sale service means wherein you don't have to pay anything. But is it really free? No, it is not really free, because the dealer or the service center who is doing the repairs. See, we completed about the parts replacement during warranty period. I am talking about now after sale service. So the dealer or service center who do the free after sale service will get the reimbursement from the manufacturer, on which definitely the dealer or the service center is required to pay GST. Actually, it is not free. Don't think free after sale service means really it is free. You already paid for it. When you paid at the time of purchase of the car or two-wheeler, you already paid for it. So thereafter, when they are doing, that is manufacturer you paid, but dealer will do the service. So the dealer will collect a coupon from you. You will be provided with one owner's manual book. In that, free coupons will be there. That coupon they will take and they will get the reimbursement from the manufacturer. So with respect to this reimbursement from the manufacturer, definitely GST will be payable by the service center or the dealer. Okay. In such scenario, there is a supply of service by the distributor and the manufacturer is the recipient of such supply of repair services. GST would be payable on provision of service by distributor to the manufacturer. Then the next issue is related to additional warranty or extended warranty charges. For example, when you buy a television or AC, washing machine, refrigerator, mobile phone, everywhere now there is a concept of additional warranty. That is, standard warranty will be given by the manufacturer, maybe for 1 year or 2 years. If you pay extra amount, you will get a extended warranty. Okay. Now, say for example, you are purchasing a smart TV, MI TV you are purchasing. The rate of GST applicable on MI TV is 28%. Okay. 28% is the rate of GST on TV if it crosses 30 inches. Okay. Like, but no one is using now 30 inches, everyone is using 40 inches, 50 inches, 55 inches, like that they are going. So the rate of GST will be 28%. Now, what happens with smart TV is that sometimes it so happens that it may hang and it may not work. There could be some lines in the display. Lot of issues will be there, like smartphone only. Like how today's smartphone issue is there, the same issue will be happening with respect to TVs also. Then in that case, what is the way out? Because that also works on some software or some hardware, etc. Then there is a risk involved for the buyer. Maybe what if it happens after 1 year? Standard warranty 1 year. After 1 year, what if it happens? For that reason, say the buyer is paying some extra amount, some 5,000 rupees for extended warranty for 2 years. 1 year anyhow covered. Now the extra 2 years, there will be extended warranty, but for that extra 5,000 rupees, the buyer has to pay. What is the treatment of that 5,000 rupees? Now, when that 5,000 rupees is payable, usually at the time of purchase of the TV itself, you can pay for it and you can get the extended warranty. Sometimes they will say you have to get the extended warranty within 30 days from the date of purchase. You purchase, you don't have money at that time. It's okay. Later point of time also you pay, but it should be within 30 days from the date of purchase. Should we pay the additional warranty to the same supplier? Not necessary. So when you buy a TV from Reliance Digital, not necessary that you need to pay to Reliance Digital. Directly you can go to mi.com or .in and you can pay money to them also, or you can pay to Chroma, or you can pay to MI showroom. Anywhere you can pay for the additional warranty. What you need is the serial number of the product. If you have the serial number of the product, anywhere you can go and pay. Now depending upon that, the treatment will change. See this. Sometimes companies provide offers for extended warranty to customers which can be availed at the time of original supply or just before the expiry of the standard warranty period. Whether GST would be payable on both the cases. So for which, if customer enters into agreement of extended warranty with the supplier at the time of original supply, remember, same supplier at the same time of purchase. So you are purchasing from Reliance Digital. At the time of purchase from Reliance Digital itself, you are making the payment for extended warranty. Now in that case, TV is 28%, extended warranty rate of GST is 18%, it will become composite supply. When it becomes composite supply, we need to take the rate of principal supply. What is the rate of principal supply? Television, 28% will be applied. Okay. So at the time of original supply, then the consideration for such extended warranty becomes part of the value of the composite supply, the principal supply being the supply of goods, and GST would be payable accordingly. So what is the conclusion? It's better not to pay the warranty at the time of purchase of the TV, because TV 28%, warranty also will become 28% because it is naturally bundled and composite supply gets attracted. However, if it is reverse, the product rate is 12% and the extended warranty is 18%. It is always advisable to pay for the extended warranty at the time of purchase of the product with the same supplier itself. Okay. So now we need to take the decision accordingly. However, if the supplier of extended warranty is made by a person different from the supplier of goods, for example, when you go to an mobile store, say a lot of mobile stores are there, like Sangeeta Mobiles, Purvika Mobiles, Chennai Mobiles, like that a number of mobile shops are there. Now these mobile shops, what they will do, they will not collect the amount for extended warranty, because that extended warranty will be given by a different supplier. Some other supplier will be given. A lot of people who will be giving, sometimes the manufacturer also will give. Now the seller of the mobile phone is not doing the warranty, means not providing the extended warranty. Now in that case, what is the treatment? Then it is treated as a separate supply. So mobile separate supply, that warranty will be separate supply. If the supply of extended warranty is made by a person different from the supplier of goods, then the supply of extended warranty will be treated as a separate supply from the original supply of goods and will be taxable as supply of services. So it will be an independent activity. Now in case of TV, always it is advisable not to make payment for extended warranty to the same supplier. You know why? At the same time you can pay, but not to the same supplier, because if you pay to the same supplier, on warranty also 28% will come. Whereas if you pay to the different supplier, even though at the same time, the rate will be 18% for the warranty, separate. It's a separate supply, so 18% will be applicable. Now, in case where the customer enters into agreement for extended warranty at any time after the original supply. So now what they will tell, sir, you have 1 year time limit, that is before expiry of the standard warranty you can pay for the extended warranty, or 30 days you have to pay for the extended warranty, like that. So we will exercise that extended warranty option at a later point of time. Now we are making payment later, not at the time of purchase of the product. So for this extended warranty, we pay separately, later point of time. Now what is the treatment? Always it's an independent supply, separate supply, and the regular rate of GST for warranty, that is 18%, that will be applicable. In case where the customer enters into agreement of extended warranty at any time after original supply, then the same shall be treated as supply of service distinct from original supply and shall be liable to discharge, pay GST accordingly as a separate supply. Okay. Now you need to remember in simple words just 2 points. At the same time from the same supplier, at the same time from the same supplier, at the same time from the said supplier, same supplier, composite supply. Rate of the product is the rate on the warranty, extended warranty. So at the same time from the same supplier, at the same time from the same supplier, whatever is the product GST, that will be applicable on warranty also. Okay. Then suppose opposite of this, what is opposite of this? Same time different supplier, same time different supplier, or different same time different supplier, same supplier different time, same time different supplier, same time different supplier, or same supplier at a different time. Okay, opposite. Then in that case, it's a separate supply chargeable to GST as independent activity, means it is treated as supply of warranty service, taxable accordingly. Don't apply composite supply point. Then next one. So this is actually the latest amendment, the circular, whatever the circular we have discussed, it was not there for September 24 exam, and this is a very big circular. So previously they gave one circular and after they have modified. So this is purely applicable for Jan 25 exam. Definitely on these points you can expect a question for the forthcoming attempt. Okay. Then next one, we have taxability of shares held by a holding company in a subsidiary company. So this was an old amendment only for September itself. Generally holding company and subsidiary company are treated as related persons as per section 71C of CGST Act, any transaction between them is treated as a supply. So first, they are treated as related as per explanation to section 15. Holding company and subsidiary company, there is a control. So control means they are related. So if it is related, any activity between them will become supply under 71C, any transaction involving goods or services. Now there is a holding company which is holding the shares of the subsidiary company. That is, they purchase the shares of the subsidiary company, or they are holding the shares of the subsidiary company. In this case, whether this activity will become supply. First of all, shares, that is securities, are neither goods nor services. Consequently, it will not come under supply 71C, because first it should become goods or services. When it is not goods or services, so why it should be covered? It will not be covered. Okay. So it is clarified that securities are considered neither as goods nor as services in terms of definition of goods and the definition of service. Further, securities include shares, and due to that reason there won't be any GST in this case. So it's a simple point only. So what you need to remember is that the activity of holding of shares of subsidiary company by holding company per se cannot be treated as supply of services. Only if there is a facilitation or arrangement of transaction in securities, which we already know. If there is any broker or intermediary or any depository, etc., who is not selling the securities but dealing in securities, like facilitating or arranging in securities, then they get a commission. That commission is only treated as supply. So these are the amendments related to supply. Now, charge of GST. In this charge of GST, director services, as per section 9 subsection 3, read with notification 13 of 2017, services provided by director of a company to a company or body corporate is covered under RCM, wherein liability to pay GST is on company or body corporate under RCM. And we all know that. So if the director is an employee of the company where the TDS is deducted under 192 of Income Tax Act, the money so received by the director will come under salary and it will not be chargeable to any GST, because salary is excluded from supply, employee to employer in the course of employment. However, if the remuneration which is paid by the company is deductible for TDS under 194J of Income Tax Act, then the money so received by the director is covered under supply and chargeable to GST. However, GST will not be payable by director but payable by the company. This already we know. Now, what is the point here? What if director is providing some services to the company, not in the capacity as a director, but in his personal capacity? A director could be a chartered accountant who will be providing some professional services to the company. Now, in that case also, company only will pay GST under RCM for this professional services? No. In that case, the chartered accountant only will pay GST. Same way, that is, director being a chartered accountant, in the capacity of a chartered accountant he will pay, not in the capacity of a director, company will pay. Then number 2, a director may own immovable property. That immovable property may be given on rent to the company. Now in that case, will the company pay GST? No, depends. So we have to see it separately. It's not director service, it is renting service. Depending upon the renting service, it will come. Suppose if it is a residential property for residential purpose to a registered person, it is RCM. And suppose if it is a commercial property, then it is FCM. So you treat it as a renting service, don't treat it as director's service. Okay. So tax on services supplied by director of a company or body corporate to the said company or body corporate is payable by company under RCM. It is hereby clarified that service provided by director to company in his private or personal capacity, okay, are not taxable under RCM. Example, renting of immovable property. Then how we need to treat it as a separate activity and determine depending upon the provisions. Only those service provided by director in which he is acting as in the capacity of director, then only it will come under RCM. Then next, list of notified services on which tax is payable on reverse charge mechanism by the recipient. We know that Indian Railways is excluded now from RCM, which means that Indian Railways providing any services, if it is not exempted. What is exempted for Indian Railways? In case of passengers, other than first class or other than AC is exempted. Like sleeper ticket, general ticket, etc. exempted. Same way, when it comes to goods, specified goods transported in railways is exempted. Notified goods, agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural man-made disasters, defense and military equipment, those notified goods, that will be exempted. Apart from this, every other activity of Indian Railways will be taxable. Now, wherever Indian Railways is taxable, it will not come under RCM even if they provide service to business entity. Generally, government providing service to business entity will be RCM, but Indian Railways will come under FCM only because they have excluded Ministry of Railways from this. Okay, and even here also it is excluded. So everywhere it is excluded, which means just simply remember one point, railways providing services even to business entity will not come under RCM, it will be FCM only. Okay, next. Then we have some list of notified services under 9.5 where liability to pay GST is on e-commerce operator, that is H for housekeeping service, A for accommodation service, T for transportation of passengers in any motor vehicle, and E for eating food in a restaurant. Related to the transportation of passengers in any motor vehicle, there is one exclusion point wherein generally for transportation of passengers through e-commerce operator, liability to pay GST is on e-commerce operator whether the supplier is registered or unregistered. However, if it is transportation of passengers by omnibus, omnibus means a vehicle which has a capacity more than 6 passengers. So, including driver seat 7. So, 7-seater vehicles, like including driver 7 means greater than 7. Greater than 7 means 8-seater vehicles. 8-seater including driver. Greater than 6 passengers. If you add driver, greater than 7, greater than 7. Greater than 7 means what? 8. Not equal to 7. Greater than 7. 8-seater vehicles. 8-seater vehicles means front row 2, middle row 3, back row 3, those kind of vehicles that will be coming under omnibus. And in case of omnibus service, like mostly lot of Innovas will come under omnibus category, because in Innova in the middle if they put 3 seats, the moment they put 3 seats, because back will be 3, the middle if it becomes 3, it's 8-seater, so it will become omnibus. And if it is by a company, so it will not come under 9.5. So company only will pay GST. Even buses, big buses. So Rapido. So in Rapido, you will be booking. So if it is a normal car, Rapido only will pay GST, normal car. If it is an omnibus, so big vehicles like Xylo or Innova, etc. and all, that may come under FCM. So Rapido will not pay. Red bus, always the supplier will pay GST because it's an omnibus. Red bus, definitely bus means more than 6 passengers, and definitely if the supplier is a company, there is a travels, KPN travels or some other travels, TVT, Orange travels, like that, if they are company, the company only will pay GST. So the government, this is e-commerce operator, one such category, see this, services by way of transportation of passengers by radio, taxi, motor cab, motorcycle or any motor vehicle except omnibus. Okay, except omnibus. So service by way of transportation of passengers by omnibus, except where the person supplying such services through e-commerce operator is a company. So company providing transportation of passengers in a omnibus through e-commerce operator, company only will pay GST, but e-commerce operator will not pay GST. Okay, then so that is this paragraph. The tax on service by way of transportation of passengers by omnibus provided by a company through e-commerce operator, not payable by e-commerce operator, payable by company itself. Next, place of supply related amendments. In this, so we need to understand section 10(1)(CA). There is a new clause that is added. Section 10 deals with place of supply in case of goods. In that 10(1)(A), supply involves movement of goods. 10(1)(B), bill to ship to transactions. 10(1)(C), supply does not involve movement of goods. And 10(1)(CA), like that they have added. That is in case of 10(1)(A) and 10(1)(C), if it is supplied to an unregistered person. Notwithstanding anything contained in 10(1)(A) and 10(1)(C), that's how the word starts. Which means, first we need to see if the supply involves movement of goods. Again divide into two. Is it to registered person or is it to unregistered person? If it is to registered person, ending point will be taken as the place of supply. If it is to unregistered person, 10(1)(ca) will come, which says location of recipient in the records of supplier. In the absence of that recipient details, location of supplier. So that is this. So 10(1)(ca), they have added one provision. So see this, where the supply of goods is made to a person other than registered person. Who is other than registered person? Unregistered person. The place of supply shall, notwithstanding anything contrary contained in clause A or clause B. Means this is a non-obstance clause wherein 10(1)(ca) will override 10(1)(a) and 10(1)(c). Okay. Be the location as per the address of the said person recording the invoice issued, and where address of the said person is not recorded, location of supplier. Location of supplier where the address is not available in the records of the supplier. So supplier only will be taken. This is what the provision is, and this is common for 10(1)(a) as well as 10(1)(c). 10(1)(a) when applicable, supply involves movement of goods. 10(1)(c) when applicable, supply does not involve movement of goods. If supply involves movement of goods, ending point will be taken. If supply does not involve movement of goods, location of goods at the time of delivery will be taken as the place of supply. This is a regular provision, but this is in case of sale to registered person. But in these two places, if the sale is made to unregistered person, we need to take location of recipient in the records of supplier. In the absence of that information, location of supplier. This is already there. But what happened now is that, what is the meaning of location of recipient in the records of the supplier? There might be two locations of the recipients. One is the billing address, another is the delivery address. Sometimes the billing address and delivery address will change. Example, when you place an order in Amazon, so e-commerce operators, e-commerce transactions, usually we give the billing address and the delivery address. And what if the billing address and delivery address match, means both are same? Then the billing address only will be taken as location of recipient in the records of supplier. What if billing address is different and the delivery address is different? Okay, so if the billing address and delivery address is same, so this is the new amendment for Jan 25 only. This is amendment applicable because this particular point is added with effect from one, that is this clarification, I think, yes, this clarification is given at a later point of time. It was not there previously. They have added at a later point of time. So definitely for Jan 25 exam only it will be applicable. That is when the billing address and delivery address match. Okay. So we need to take, so you can see that here below. Third point. So this point is already there. This amendment is already there. That is 10(1)(ca) is already there. It was for September itself. What does 10(1)(ca) says? Location of recipient in the records of supplier. Location of recipient in the records of the supplier. Otherwise, location of supplier. And sir, if address is not there, only state is there, is it okay? Yes. Just the state information is there, it is okay. Not necessary that you need to have the complete address. Just the state information is also sufficient. Simply mentioning the state of the unregistered person instead of complete address would be sufficient. Just the state is also sufficient. This already we know. Now continuing to this, see the third amendment. Place of supply of goods in case of goods supplied particularly through e-commerce platform to unregistered persons. So through e-commerce platform, there will be supply made by the supplier wherein two addresses could be there. Of course, location of recipient in the records of supplier, but in the records of supplier, there are two addresses. Which address should be taken? Is it the billing address or the delivery address? If both are same, say this. So place of supply shall be the address of delivery of the goods recorded on the invoice where the delivery address is located. Okay. Where the billing address and delivery address are different, the supplier may record the delivery address as the address of the recipient. So 2 points, billing address, delivery address match, one address is only there, that address only you take. Billing address is different from delivery address, don't take billing address. Actually for 10(1)(b, Bill to ship to transaction, we take billing address. But here they have given a clarification. In case of sale to unregistered person through e-commerce platform, in case of sale to unregistered person through e-commerce platform, don't take billing address. If billing address is different from delivery address, take only delivery address. Okay. This is not applicable for 10(1)(b). 10(1)(b) always billing address only, bill to ship to transactions. Then next one. So another circular is there which is related to display of advertisement in the hoardings. So this display of advertisement in the hoardings already they tested for September 24 exam, but anyhow this amendment is there, so we will discuss. No need to read this fully, just simply we can understand that what happens. Usually when you want to display an advertisement in the hoarding, so you will approach an advertising company or an advertising agency. That advertising agency would have already installed the hoarding in one property, and they would have made the payment to the property owner for installation of that hoarding. Now there are two supplies. Supply number one between the property owner and the advertising agency, where the property owner allows the advertising agency to keep that hoarding over there. That is supply number one. Supply number two between the advertising agency and the client, where the client wanted the advertisement to be displayed, the brand name or the company want to display their brand name on the hoarding. So that will be a supply number two. For supply number one, as it is immovable property related services, service in relation to immovable property, usually for immovable property services, the place of supply will be location of property. So therefore, wherever is the property located, that will be taken as a place of supply in that case. Whereas supply number two, by advertising agency to their customer or client, it is not service in relation to immovable property, because already they have the hoarding, and for few days they will be giving the space on the hoarding. So it is space on the hoarding, that's why it will come under advertisement services only. And as we don't have any specific provision for advertisement service, general provisions will be applicable. So as per general provision, B2B location of recipient, B2C location of recipient in the records of supplier, otherwise location of supplier, that will be taken. Okay. So advertising companies are often involved in procuring space on hoardings, billboards erected and mounted on buildings or land in different states from various suppliers for providing advertisement services to corporate clients. There may be variety of agreements between the advertising company and its vendors as below. Issue number one, there may be a case where supply of space or supply of rights to use the space on the hoarding belonging to a vendor to the client or advertising company for display of their advertisement on the said hoarding. What will be the place of supply in that case? So vendor means he is the property owner. So that particular person is giving space to install the hoarding. That will be service in relation to immovable property. Now again, coming back to our example, what if the client directly approaches the property owner rather than approaching the advertising company? So because the client can make the arrangement for the hoarding, he can print the hoarding, he can install it, everything. Then the company directly approaches the property owner to keep the hoarding, then it is purely renting of immovable property only. The hoarding or structure erected on the land should be considered as immovable structure or fixture, as it has been embedded in dirt. Further, place of supply of service in relation to immovable property will be location of that immovable property, and that will be taken. So see this, therefore place of supply of service provided by way of supply of space on hoarding or structure. So we need to take location where such hoarding or structure is located, location of immovable property. Second, there may be another case where the advertising company wants to display the advertisement on hoarding or billboard at a specific location, availing the service of the vendor. The responsibility of arranging the hoardings lies with the vendor, who may himself own structure or may be taking it on rent. Now what advertising companies will do? So this is amendments, page 17. So what happens is that sometimes these hoardings, already taken by the advertising company. So they will take the hoarding, put the hoarding, and they will mention to advertise here, contact, like that they will put the number. To advertise here, contact, like that one number they will put. Means already they have taken the hoarding. Already hoarding belongs to them. Now you want the advertisement to be done. That is the example I was discussing. Advertising agency to the company or customer. Okay. In that case, what they are telling, it will be treated as normal services, advertising services, and general provisions will be applicable. Such service provided by vendor to advertising company or purely in the nature of advertisement services, and the place of supply determined as per 12.2. 12.2 means general provisions. So in case of general provisions, B2B, location of recipient, B2C, location of recipient in the records of supplier, otherwise location of supplier will be taken. Okay. Then next we have exemptions from GST. So let's proceed to the next one, that is exemptions from GST. In these exemptions, so these are all already existing exemptions only, so they have not added any new. So one point, previously satellite launch services provided by ISRO, Antrix Corporation, New Space India Limited was only exempted, but now they omitted these three, that is Indian Space Research Organization, Antrix Corporation and New Space, which means satellite launch service provided by any company in India which is associated with satellite launch services, so their services will be exempted. They are not required to pay any GST. Even a foreign company like SpaceX can also come to India, set up their business in India, and whatever money that they earn, they are not required to pay GST. All satellite launch service is now exempted. Then next one, for Indian Railways, we don't have any exemption that is applicable for services to business entities. Okay. So services by Department of Post and Ministry of Railways, and even the interdepartmental services we have discussed. So in exemptions, specific exemptions, one department of central government to another department of central government or state government, that exemption also not applicable for railways. So railways, that services to business entities point will not be applicable to railways. So which means now railways is always taxable. Unless the transportation is exempted, all other activities of railways will be taxable. So whatever general exemptions or the specific exemptions that we have discussed for normal government to business entities will not be applicable to railways. That is this. And the Ministry of Railways is excluded here, even here also. That is, this is talking about the services by central government, state government, union territory, excluding the following services. So now Indian Railways will be taxable. What other services Indian Railways will do apart from transportation? They will be providing, this storage. What is that called as? One space they will give, so you can store your luggage, etc. and all. So like that space they will be providing. Clock room, correct? Clock room charges, then waiting hall charges, like that all other activities of the Indian Railways will be taxable. It is not covered under exemption, even if it is given to individuals, also. Then next one, this is related to aggregate turnover during a previous year does not exceed threshold limit. Services provided by government to business entities whose aggregate turnover during the previous year does not exceed threshold limit for exemption, even that general exemption is also not applicable for Indian Railways. And then value of supply, interdepartmental service provided by central government, state government to another central government or state government department, that is also not applicable to railways. And then 5,000 rupees point is there, value of supply does not exceed 5,000, that is also not applicable to railways. Then next one, this is services provided by any person to government authority is exempted. But what activities? Only few activities. For this only I asked you to remember one simple example. What is that? There is a person who is living in a slum area, and in that slum area he is not having proper water. Yes, because in lot of slum areas water facility will not be there, so water is not available. and there is a drainage. So because of this drainage is open, so lot of insects and all will come, mosquitoes will come, so diseases will come, so the public health, the health will get affected. When the health gets affected, so then government will come and put the sanitation, like they will put the drainages, whatever chemicals etc. required, and even they do the clearance of the scrap waste etc. So whatever waste, household waste and all, they will clear, and this is done by the government. Okay, so now there is a person who provides services to government authority. What is that? Slum, living in slum. So slum improvement and upgradation. Then water problem, water supply. Then drainage issue, sanitation conservancy, and because of it the health gets affected, public health, and then waste and scrap will be cleared. So solid waste management. Okay, these activities provided by any person to government authority is exempted. Okay, that is this. And next, but it was there already for September 24 itself. Then time of supply. In time of supply, there is a new circular that is added related to hybrid annuity mode model. So what is this hybrid annuity mode model? Before explaining this, let's see the background little bit. Generally, in case of continuous supply of services, what is a continuous supply of service? A service which takes more than 3 months to complete and involves periodic payment obligations is known as a continuous supply of service. A service which takes more than 3 months to complete and involves periodic payment obligations is known as a continuous supply of service, and which means it should take more than 3 months and there should be installments also. And in case of continuous supply of service, how to determine the due date of invoice? So there are 3 points. If due date of installment is ascertainable from the contract, the due date of installment itself is the due date of invoice. If due date of installment is not ascertainable from the contract, then we need to check whether the payment is linked to completion of event. If the payment is linked to completion of event, the date on which the event is completed, that is the due date of invoice. In the absence of this, whenever the payment is received, that is the due date of invoice. This is the due date of invoice in case of continuous supply of service as per section 31 subsection 5. Then how to determine the time of supply in this case? Time of supply under section 13 subsection 2, services FCM. If invoice is given within the due date, just now we discussed due date. If the invoice is given within the due date, then date of invoice or date of payment, whichever is earlier. If the invoice is not given within the due date, then whenever the service is completed or payment, whichever is earlier. What is the meaning of service completion here? Whenever that particular portion is completed, not entire service, whenever that particular portion. So events will be there. Now for example, construction, if you take completion of first floor, completion of second floor, like that, events, whenever that event gets completed, so that completion of event or the payment, whichever is earlier, will be taken. These are the 2 provisions, section 31 subsection 5 and 13 subsection 2. Now what happens in hybrid annuity model? So National Highway Authority, government authority, so they will be giving a contract to some builders to lay down the roads, and they will only maintain these roads also. So construction as well as maintenance of the roads, which takes more than 3 months. So therefore it is a continuous supply of service, and the government is not going to pay lump sum amount to the contractor at a time. They will be paying in annuities, so means in installments. Okay, now definitely it's a continuous supply of service, no doubt. Under the hybrid annuity model of National Highway Authority of India, the concessionaire has to construct the new road and provide operation and maintenance of the same, which is generally over a period of 15 to 17 years, and the payment of the same is spread over the years. What is the time of supply for the purpose of payment of tax on the said service under HAM model? So for which they are telling, under hybrid annuity model of concession agreements, highway development projects are under design, build, operate, transfer model, wherein the concessionaire is required to undertake new construction of highway. First they need to do the construction, and then operation and maintenance, because once they construct, it is not going to be like that forever. So maybe some rainfall, because of which there could be some pits or some damages to the road, again they need to rectify all those things. and the payment terms for the construction portion as well as O&M, that is operation and maintenance of the contract, are provided in the agreement and the concessionaire. The HAM contract is a single contract, so that is important. HAM contract is a single contract for construction as well as operation and maintenance of the highway. The payment terms are so staggered that the concessionaire is held accountable for the repairs and maintenance. That's fine. They are talking about the HAM contracts. But this HAM contract is a continuous supply of service. It's a continuous supply of service. How to determine the due date of invoice, time of supply, etc. The tax liability on the concessionaire, including the construction portion, would arise at the time of issuance of invoice or payment, whichever is earlier. Invoice or payment, whichever is earlier. If invoice is issued within the due date, means they are referring to section. So 31 subsection 5 is the due date of invoice, and section 13 subsection 2 is the time of supply provisions. If invoice is issued on or before the specified date, suppose if invoice is not issued, then date of completion as the case may be applicable. If invoice is not issued on or before the specified date, so what they are telling, you take the date of completion or date of payment. Date of completion or date of payment, whichever is earlier, will be taken. Literally section 13 subsection 2. Then now in every annuity there will be interest. Generally for interest, the time of supply will be as and when that interest is actually collected, because as per section 13 subsection 6, the time of supply in case of interest, late fee, penalty for delay in receipt of consideration is the day on which that interest is actually received. Now in that case, in every annuity there will be interest component. So for that interest component, how to determine the time of supply? No need to determine time of supply separately for interest component, because this interest is nothing but part of installment. So how you determine the time of supply for installment? The same is applicable even for the interest involved in that installment. It is also clarified that the installments or annuity payments payable by NHAI to the concessionaire also include some interest component. The amount of such interest component shall be includable in the taxable value. Shall be includable in the taxable value for the purpose of payment of tax. Means how you determine the time of supply for installment, the same thing will be applicable. So this is about HAM contracts, okay. And I have given some amendments material in my website. So in that amendments material, I have included all those things. In addition, I have given some extra amendments also. So, but all those amendments are not applicable for Jan 25 exam. Reason being, so what this ICAI did, only few amendments they have included, and remaining amendments they have not included, but I provided lot of amendments. So that's why I'm just taking that for you, because I have given some good number of questions on amendments, and it is there in my website under downloads, and you can see that, okay. And these amendments, so see this first one about HAM model. I included the amendments of Jan 25, okay, only Jan 25, because September amendments already covered in the books what I have provided, okay. And this is that circular on hybrid annuity model, and already I have explained to you fully, okay. Already the explanation I have given. So that is continuous supply of service, due date of invoice is what is the time of supply, and inclusion of interest in the taxable value. Now I have given one question. Have a look into this question. Larsen and Turbo. ICAI has not given the questions on amendments, so I have included the questions on amendments also. So that's what I am discussing. Maybe a similar question like this could come in exam for that reason. Larsen and Turbo has entered into a hybrid annuity model contract with the National Highway Authority of India for the construction, operation and maintenance of the highway. The contract specifies that L&T will receive payment in 20 equal installments. So 20 equal installments over 10 years. Each installment is 10 lakhs, which includes 1 lakh as an interest component. So each installment 10 lakhs, in the 10 lakhs itself 1 lakh is interest component. and the deemed date of completion of the milestone event is 30th June 2024. So what is milestone events? Milestone events means they will, in the contract they will specify certain milestone events by when we should pay how much amount, like that. Okay. So the milestone event here is 30th June 2024, which means the first installment or the installment of 10 lakhs is payable on or before 30th June 2024. Okay. The due date for the first installment is 1st July. Okay. 1st July is the due date. The due date of the first installment is 1st July 2024. However, L&T issued the invoice for the first installment on 5th July 2024. They gave the invoice on 5th July. So, the actual date of invoice is 5th July. And the payment was received on 15th July 2024. The applicable rate of GST for such contract is 18%. Okay. Now, what is the due date of invoice as per section 31 subsection 5? Okay. So, what is the due date of invoice as per section 31 subsection 5? So, due date of invoice is what? First, if the due date is ascertainable from the contract. Is the due date of installment ascertainable from the contract? Yes, yes. The due date of installment is 1st July 2024. As the due date of installment is ascertainable from the contract, as per section 31 subsection 5, the due date of installment is the due date of invoice. Okay. So, that is the first part. So, as per section 31 subsection 5, as per section, you can make note of this. Anyhow, the PDF is there and you can take the PDF as a print also later. But you can make note of the answer, because I am just teaching you how to present also in the exam. Because see, usually on amendments, like this type of questions only will be coming. Okay, trust me. So, as per section 31 subsection 5 of CGST Act 2017, in case of continuous supply of services, in case of continuous supply of services and where due date of installment is ascertainable from contract, comma, due date of invoice is due date of such installment, that is 1st July, right? 1st July 2024, 1st July 2024 in the present case. Suppose if the due date of installment is not given in the question, suppose if this is not there, then what would have happened? If due date of installment is not given in the question and the payment is linked to completion of an event, yes, here the payment is linked to completion of event. So, as and when the event is completed, we would have taken, so 30th June 2024 would have been taken as the due date of invoice, because first point says if due date of installment is ascertainable. See the provision as per section 31 subsection 5 of CGST Act. If due date of installment is ascertainable from the contract, then the due date of such installment. If the payment is linked to completion of event, the date of completion of such event. In the absence of above, then the date on which such installment is received. So, first one, if not available, then second, payment is linked to completion of event, the date of completion of such event. So, 30th June 2024 would have been taken. Okay. Then next, but here in the question, as due date of installment is ascertainable, so we will go by the due date of installment. Then second part of the question, what is that? What is the time of supply as per section 13 subsection 2, and what is the due date of payment of GST? Here we need to see whether invoice is given within the due date or not, because section 13 subsection 2 services under FCM, if invoice is given within the due date, then we will take invoice date or payment date, whichever is earlier. If invoice not given within due date, then we will take completion date or payment date, whichever is earlier. Now check whether invoice is given within the due date. No, because the due date is 1st July, but the invoice is given on 5th July. So write down the answer. As per section 13 subsection 2, as per section 13 subsection 2 of CGST Act 2017, as invoice not issued within due date, as invoice not issued within due date, comma, time of supply of services is date of completion. What is the date of completion in this case? That is, so the event, that milestone event, when the milestone event is completed, 30th June 2024, 30th June 2024, or date of payment received. So the date on which payment is received, that is, so the date on which payment is received is 15th July 2024, 15th July 2024, whichever is earlier. Therefore, time of supply is 30th June 2024. If time of supply is 30th June 2024, then what is the due date of payment of GST? Next month 20th is the due date of payment of GST. And due date of payment of GST, usually due date of payment of GST is due date of filing 3B of that month. What is the due date of filing 3B for June? It is 20th of July. So, and due date of payment of GST is 20th July 2024. 20th July 2024 will be taken as the due date of payment of GST. Next, third part of this question. Calculate GST liability for the first installment. So, what is the installment? 10 lakhs. Whether interest is to be included in the value? Yes. And the interest is already included. So, no need to add again. So, value of supply is 10 lakhs and interest includable as per section 15(2)(d). As per section 15(2)(d), we need to include interest. GST on above, GST payable on above, that is 10 lakhs, entire 10 lakhs we need to take into 18%. Sir, won't this be exempted? No, this is not exempted because it is not coming under toll charges. If it is toll charges, then it is exempted, but it is not toll charges. So the builder is providing service to the government authority and they are getting the consideration in installments. This is not toll charges. If they collect from the people who are using that road, then that toll charges is exempted. So into 18%, that is 1,80,000 will be taken as the GST payable, GST liability. What will be the time of supply if the invoice is issued on 1st July and what is the due date of payment of GST? Now the time of supply will change. Why time of supply will change? Because invoice is given within due date. Due date of invoice is 1st July. Actual date of invoice is also 1st July. So as invoice is given within the due date, now we take invoice date or payment date, whichever is earlier. So 1st July will become the time of supply. As actual date of invoice, and due date of invoice, as actual date of invoice and due date of invoice is 1st July 2024. Both actual date of invoice and due date of invoice is 1st July 2024, comma. So time of supply is actual date of invoice, actual date of invoice. What is that actual date of invoice? That is 1st July 2024, or date of payment. Date of payment. What is the date of payment? That is date on which payment is received. In this case is 15th July 2024, whichever is earlier, whichever is earlier. Therefore time of supply is 1st July 2024. If 1st July 2024 is the time of supply, due date is GSTR 3B due date of July. What is the GSTR 3B due date of July? 20th of August. And due date of payment of GST and due date of payment of GST, due date of payment of GST is 20th August 2024. 20th August 2024 will be taken as the due date of payment of GST. So that is with respect to this. So a similar question could be coming in exam, trust me. So this I have coined, but even ICA standard also they will make a question like this, connecting multiple provisions, they will be coining the question. Okay. Then next one. So continuing further, value of supply. So that is, what is the time of supply in case of specified actionable claims? So specified actionable claims, there is one notification 66/2017 section 12 subsection 2 read with notification 66/2017 that we need to understand. So let's see the background. Time of supply in case of goods under FCM. As per section 12 subsection 2 of CGST Act, the time of supply of goods is due date of invoice or actual date of invoice or date of payment, whichever is earlier. However, in case of a person other than those opting for composition scheme and other than specified actionable claims, it will be only two dates, actual date of invoice or due date of invoice, whichever is earlier. So that is what they are telling. Previously, notification 66/2017 was given, which is telling that person other than opting for composition scheme, time of supply is as per 12(2)(a), that is due date of invoice or actual date of invoice, whichever is earlier. But now for specified actionable claims, persons who are making specified actionable claims also, they have extended this notification. Accordingly, what is the time of supply in case of goods? So time of supply in case of goods, whenever you get a question related to time of supply on goods, you need to give the reference section 12 subsection 2 read with notification number 66 of 2017. Only this notification number you remember, because this notification 66/2017 they amended through notification 50/2023, but you remember the original notification number only. So section 12 subsection 2 read with notification number 66/2017. We will divide it into two. What is that? In case of person opting for composition scheme, person opting for composition scheme, person opting for composition scheme or specified actionable claims. What are the specified actionable claims? HC block. Specified actionable claims. So specified actionable claims is HC block. We will be taking due date of invoice or actual date of invoice or date of payment, whichever is earlier. Okay, we'll take three dates. Due date of invoice. First we'll take due date of invoice, or actual date of invoice. We'll take actual date of invoice, or date of payment. We'll take date of payment. whichever is earlier. So in case of specified actionable claims, that is person opting for composition scheme, as well as specified actionable claim HC block, it is due date of invoice, actual date of invoice, or date of payment, whichever is earlier. Whereas for others, it is only two, that is due date of invoice or actual date of invoice, whichever is earlier. Okay, due date of invoice or actual date of invoice, whichever is earlier will be taken. And what is the due date of invoice? We have multiple provisions. Section 31 subsection 1 says supply involves movement of goods at the time of removal, supply does not involve movement of goods at the time of delivery, then continuous supply of goods, account statement date or payment receipt date as the case may be, and in other cases, that is like sale on approval or on return basis, 6 months from the date of removal or date of acceptance by the buyer, whichever is earlier, like that due date of invoice will be taken. So this is about the amendment. Again, this is not an amendment for Jan exam, this was amendment even for September exam itself. So but I discussed, because from the past practice what I have been observing is that lot of questions they started asking on amendments, because the students will not be updated with the law. So that's why they will be asking questions on amendments. Easily 10 to 15 marks will be from amendments. That's what I have observed, including MCQs everywhere. So why to leave this 15 marks? That's why we are discussing this. Then clarification on availability of ITC in respect of warranty replacement of parts and repair service during warranty period. Okay, so this particular warranty concept, so I have given along with ITC. So first supply aspect, then whatever we have discussed already in one circular, there they gave from the supply point of view, is it supply or not a supply, and then from ITC point of view also they have given. Okay, so that particular ITC point of view, whatever discussion that they have given here, full, already we discussed those issues and all. So here I have just compiled it. Okay, and we have even a question related to this. So first we will try to understand from the circular what they are trying to convey. Already we know all these issues which we have seen. Issue number 1. There are cases where the original equipment manufacturer offers the warranty to the goods supplied by him to the customer and provides replacement of goods during the warranty period. Okay, now what about the ITC? So can the ITC be availed by that particular supplier? Yes. For example, there is a manufacturer or a dealer who is providing the replacement during warranty period. To do that replacement, they need to buy. Can they take ITC on that? Yes, I already told you there is no issue with respect to block credit also. They can definitely enjoy the ITC. Okay, therefore these supplies cannot be considered as exempted supply, and accordingly manufacturer who provides replacement of goods not required to reverse the ITC. They are not required to reverse the ITC, they can enjoy the ITC. Then what if dealer is doing this replacement? Again, there are 4 instances or 4 scenarios that we discussed. What is the first scenario that we discussed? Dealer procures from the third party and claim the reimbursement. We saw GST aspect on reimbursement. Now the dealer is procuring that part from the third party. Can the dealer take ITC on that procurement from the third party? Yes. So dealer, there are 4 instances wherein distributor replaces the parts to the customer under warranty either by using his stock or by purchasing from third party. In the case where he purchases from third party, no reversal of ITC by the distributor, he can enjoy the ITC. Second scenario. In second scenario, what will happen? So he requests for that part from the manufacturer, and manufacturer will be sending the part. First of all, there is no GST and there is no question of ITC, and the manufacturer also not required to reverse any ITC. Okay, no reversal is required to be made by the manufacturer because manufacturer is sending it to the dealer. Second scenario, that reverse sensor, parking sensor, when the manufacturer, distributor, that is dealer or service center, request from the manufacturer, manufacturer is sending that part. When the manufacturer is sending that part, manufacturer will buy that, Can he take ITC? Yes, he can take ITC. There is no restriction with respect to that. Then third scenario. In third scenario, what will happen? So out of the 100 numbers of parking sensor, one sensor is used by the service center, okay, and manufacturer gives a credit note. When manufacturer gives credit note, what will happen? The manufacturer liability will come down, and for the dealer or service center, they need to reverse the ITC based on credit note. Whenever credit note is given by supplier to recipient, recipient should reverse the ITC. So distributor has to reverse the ITC against the part so replaced because manufacturer issues a credit note. Then fourth scenario. In fourth scenario, what will happen? Replenishment. Replenishment means first the service center or dealer will take one part and will be using it. Now that will be refilled by the manufacturer. So manufacturer will be sending it under the delivery challan. Can the manufacturer take ITC? Yes. On whatever he purchased, he is not required to reverse any ITC. So no GST payable on such replenishment of goods or parts, and no reversal of ITC is required to be made by the manufacturer. Got it? Now, next, where the distributor, okay, so receives, like provides after sale service, that point also we saw. Distributor provides after sale service, free after sale service. The service center provides free after sale service. Actually, this circular is connected to already what we have discussed. It is a continuing, okay. So the service center or the dealer provides after sale service, and this after sale service bill they will raise to the manufacturer. Free after sale service they will raise to the manufacturer and get the reimbursement. On this bill, can the manufacturer take ITC? Yes. So GST would be payable on such provision of service by distributor, and the manufacturer would be entitled to avail the ITC. Okay. So what is the difference between that circular and this circular? Both are same. Both are same. But only thing that is given in the context of whether it is supply or not a supply, this is given in the context of ITC, nothing else, okay. And I clubbed these two, and here I gave as a single circular. I clubbed these two and here I gave as a single circular. So first, replacement of goods during warranty period. What will happen? ITC is available, okay. ITC is available and no additional GST payable. No additional GST payable is given in that circular, the previous one, and thereafter another place we saw ITC can be availed. And inclusion of full goods for replacement, that is, what if entire goods is replaced, then also that battery operated torch example, same. Replenishment, in replenishment what will happen? So manufacturer is sending, it will be sent under the cover of a delivery challan, and even ITC can be availed, no need to reverse ITC. Then we saw extended warranty. Extended warranty, what is the treatment of that? So everything I just gave in one place. Now look into this question. Samsung Electronics sells a smartphone to a customer with a 1-year manufacturer warranty. During the warranty period, the customer experiences a defect and visits an authorized distributor who replaces the defective smartphone with a new one from their own stock. Who? Distributor. Samsung later, that is company, manufacturer, later replenishes the distributor stock. First distributor is replacing the new one. So that battery operated torch example. So you are going to Samsung store, purchase the smartphone, there is a defect. Again you are going to the store and they are replacing you the smartphone out of the stock. But that stock they replaced out of the stock by the store means from the manufacturer they need to get that smartphone refilled. Okay, replenishment. So Samsung later replenishes the distributor stock without charging any additional amount. Yes, because it is just the replacement. Additionally, at the time of purchase, the customer buys an extended 2-year warranty from a third-party service provider. Extended warranty from a third-party supplier, not from the same supplier. Third-party service provider warranty plus, which begins after manufacturer's 1-year warranty expires. You are required to determine the GST liability for Samsung on replacement of defective smartphones under the manufacturer's warranty. Now, what is the GST liability for Samsung on replacement of defective smartphone. So who is replacing? The distributor is replacing. So what is the treatment of that? First of all, this is a replacement, not a new sale. As it is not a new sale, there won't be any GST with respect to this. That is replaced mobile phone or replaced smartphone, GST not payable, as initially itself we paid the GST on this smartphone. Okay, so that is what we need to write. So point number 1, as per CBIC circular, as per CBIC circular, GST liability shall not arise. GST liability shall not arise on replacement of parts or goods. Replacement of parts or goods covered under warranty. Replacement of parts or goods covered under warranty. If no separate consideration, is charged for such replacement. If no separate consideration is charged for such replacement, yes, here they have not charged any separate consideration for such replacement. So therefore GST liability shall not arise. In the present case, Samsung distributor is not required to pay GST, on smartphone replaced. As GST already paid on the defective smartphone. Already GST paid. That's why no need to pay GST again. Okay. Next. Then second part, explain the GST implications for Samsung when it replenishes the distributor stock with a new smartphone. Suppose if they replenishes with a new smartphone for manufacturer, again there is no liability on manufacturer because they are just doing the replenishment, and as per the circular this replenishment will be under the cover of a delivery challan. As there is no supply, it should be under the cover of a delivery challan. Okay, and there is no issue with respect to the manufacturer also. So write down second, as per CBIC circular, replenishment means refilling. Okay, replenishment of smartphone by manufacturer to dealer, okay, that is distributor, Samsung distributor, manufacturer to distributor, is not chargeable to GST, and the same should be dispatched under the cover of a delivery challan, okay, under the cover of delivery challan it will be sent. Also manufacturer can avail ITC on the same. Also manufacturer not required to reverse ITC. Then third part of the question. Discuss the GST treatment for the extended warranty provided by Warranty Plus, considering it was purchased at the original sale but from a different supplier. So what is it? Is it an independent supply, or we will take the rate of that smartphone? It's an independent supply. So third one, as per CBIC circular, as additional warranty charges is paid to different supplier, it is treated as a different supply, it is treated as separate supply and not a composite supply, Therefore, the rate of GST on smartphone, is not applicable for additional warranty charges. Rate of GST on smartphone is not applicable for additional warranty charges. Even though at the same time, that is irrelevant, because both the conditions should be satisfied. At the same time, from the same supplier. If both are satisfied only, that will be applicable. Then number fourth one, analyze how the GST liability would change if the extended warranty was purchased from the Samsung directly at the time of original purchase. If additional warranty purchased from same supplier at the time of purchase of smartphone, as per CBIC circular, it is treated as composite supply. If additional warranty purchased from the same supplier at the time of purchase of smartphone, as per CBIC circular, it is treated as composite supply, and the rate of GST on smartphone is applied, on additional warranty charges. So whatever is the GST that is applicable on smartphone, the same rate of GST will be applied on additional warranty charges as well. Okay. So that is with respect to this question. Again, same question or similar question you can definitely expect, because this is related to warranty, a very big circular, and that has impact both places, supply as well as ITC. So chances are high of asking this particular circular. Okay. Then next one, clarification on time limit under section 16 subsection 4 in respect of RCM supplies received from an unregistered person. That is, whenever supplier is unregistered and the recipient is registered and the supply is covered under RCM, as per section 31 subsection 3 clause F, the recipient should give invoice to the supplier. Generally, who should give invoice to whom? Supplier should give invoice to recipient. But in case of RCM, when the supplier is unregistered and the recipient is registered, recipient should give invoice to the supplier. Okay. And in case when the recipient is issuing the invoice to the supplier, the recipient will avail the ITC, because in case of RCM, the recipient only will pay tax to the government and they will only take ITC. It will not be coming in 2B and all, so it will not be a matched ITC. Now, how to take the time limit? So, when they can take ITC? It is clarified that in case supply is received from unregistered supplier where the tax is paid under RCM and the invoice is to be issued by recipient to supplier. Generally, supplier to recipient will give, but in case of 31(3)(f), recipient will be giving it to the supplier. The relevant financial year for calculation of time limit is based on the invoice that has been given by the recipient. So, whenever the invoice is given by the recipient, that date of invoice, you should see which financial year, and depending upon the financial year, section 16 subsection 4 we need to apply, that is 30th November of the succeeding financial year. What is the time limit for availment of ITC? Section 16 subsection 4, 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. By that time, the ITC should be availed. Okay. Suppose if there is a delayed invoice, by recipient, what will happen? If recipient delays, automatically ITC is also getting delayed, because based on invoice given by recipient only, the recipient can take ITC. So, therefore, if he delay giving invoice, he will take ITC late, plus for giving invoice late, there will be penalty also on him. Okay. And when, sir, the invoice needs to be given, that time limit is not there. So, as and when he receives the goods or services, he need to give the invoice, and there is an amendment related to 30 days, but that is not applicable for your exam. So, as and when the recipient receives the invoice, he need to give it to the supplier, receives the supplies of goods or services, he need to give invoice to the supplier. Okay, that is this. And this I have given here in the amendments, you can see. So, the first amendment is that only in input tax credit, clarification on time limit under 16(4) for availing ITC in case of supplies received from unregistered suppliers. So, first you should ascertain the financial year in which invoice is issued, and 30th November of the succeeding financial year, date of filing annual return, whichever is earlier, will be taken as a time limit. What is the implication on delayed invoicing? If the invoice is issued after the time of supply and pays tax accordingly, interest on delayed payment of tax will be applicable. Additionally, the recipient may also face penalty under 122 of CGST Act for the delayed issuance of invoice. Now, see this question. XYZ Private Limited, a registered company under GST, whose aggregate turnover during the previous year exceed threshold limit, procures legal consultancy services from Mr. Santhanam, an advocate. We all know that advocate services to business entity is covered under RCM, where the business entity is required to pay GST under RCM if the business entity turnover during the previous year exceed threshold limit. So, here the business entity is XYZ Private Limited, their turnover during previous year exceed threshold limit, they received services from Mr. Santhanam, an advocate, individual advocate, it will be taxable and it will be covered under RCM, where XYZ Private Limited is required to pay GST under RCM. And moreover, supplier, that is a person whose outward supply is fully covered under RCM, is exempted from registration under section 23. So, accordingly, Mr. Santhanam is not required to get registered. Correct, he is not registered also. The legal consultancy service are provided on June 15, 2023. So, what is the date on which service is provided? June 15. And Mr. Santhanam charges a fee of 1 lakh, which is paid by XYZ Private Limited on June 16. Payment is made on June 16. However, the company's accountant issues the invoice for the legal consultancy service only on August 20. So, invoice is given on August 20 and pays the applicable GST in GSTR 3B of August 20, filed on September 18, 2024, and also wanted to avail ITC in August 2024. Answer the following questions. Who is liable to pay GST in this case? So, this is by applying section 9 subsection 3, read with notification 13/2017, liability to pay GST is on XYZ Private Limited under RCM. So, that is the answer for this. Write down. For the first part, as per section 9 subsection 3 of CGST Act 2017, read with notification number 13 of 2017, advocate services or legal services provided by individual advocate to a business entity is covered under RCM, where liability to pay GST in the present case, where liability to pay GST to government in the present case is on XYZ Private Limited. See, we have to give proper justification, then only we can expect full marks. Okay. Then next, number 2. What is the due date of invoice and who is required to issue invoice? Actually, there is one amendment related to due date of invoice for RCM, but that is not applicable for your exam. For JAN exam, the due date of invoice as per section 31 subsection 3F is the date on which they received the goods or services. Okay. So number 2, as per section 31 subsection 3 clause F of CGST Act 2017, if supplier is unregistered and recipient is registered, if supplier is unregistered person and recipient is registered person and supply covered under RCM, comma, recipient shall issue invoice to supplier, recipient shall issue invoice to supplier as and when goods or services are received. Therefore, in the present case, invoice to be issued by XYZ Private Limited, to Santanam, to Mr. Santanam by, what is the date? When they are receiving the services, see the question. The services are provided on June 15, 2023 by June 15, 2023. This is the time limit by which invoice to be issued. So therefore, in the present case, invoice to be issued by XYZ Private Limited to Mr. Santanam by June 15, 2023, that is the date on which they have received. What is the time of supply of service and due date of payment of GST, assuming the due date is 20th of next month? So due date is 20th of next month. What is the time of supply of services? The time of supply of services will be, this is services under RCM. In case of service under RCM, we need to take date on which payment is made to supplier or 61st day from the date of invoice, but here invoice is not given by supplier. So therefore, we need to take date on which payment is made to supplier only. We don't have 61st date because 61st date from the date of invoice given by supplier, there is nothing. So due to that reason, write down as per section 13 subsection 3, time of supply under section 13 subsection 3 of CGST Act. A, date of payment to supplier date of payment to supplier. What is the date of payment to supplier? So in this case, the payment is made to supplier. The company accountant issues the invoice which is paid on June 16. So date on which payment is made is June 16. June 16, 2023. B, 61st day from date of invoice. From date of invoice by supplier. Not applicable. Not applicable. There is nothing. So whichever is earlier, whichever is earlier is June 16, 2023, and due date of GST. Due date of GST is next month, that is 20th August 2023, because whenever the time of supply falls in a month, the due date is next month 20th for GST. So time of supply is June 16, 2023, because whichever is earlier, and the due date is 20th August 2023. Then what happened? Another point, by when XYZ Private Limited can avail ITZ, and whether they can avail ITZ in June 2023. See, in order to avail ITZ, they should have made the payment. So June month they have made the payment. Yes. So there are two conditions. First, they should be in possession of tax invoice. That is not applicable here, but they have given the invoice. When they gave the invoice? August 2024. Unfortunately, the invoice is given by them in August 2024. So that invoice only relevant, even though they made the payment in July, but they gave the invoice in August 20, they can avail ITC only in August. It's not in June. Okay. No. Okay. Can avail ITC only in August. Can avail ITC only in August 2024. Reason? Simple reason. One of the condition for availment of ITC is that they should be in possession of tax invoice. What is a tax invoice? Either invoice given by supplier to recipient or the invoice given by recipient to supplier. Here the invoice is given by recipient to supplier is not there. So August month only. So they can take ITC in August month, even though they made payment in June. Irrelevant. Okay. Next, is there any interest payable in the present case? Because when are they discharging the liability? They are discharging the liability in 3B of August, filed on September 18. Yes, interest is payable. So why interest is payable in this case? Because there is a delay in payment of tax. So first, the due date is 20th August. The due date is 20th August. But when are they making the payment? They are making payment on September 18. So interest payable. Okay. Is there any interest payable in this present case? Yes. From 20th July 2023. Why 20th July? Because 20th August 2023. Because here, July 23. 20th July 2023. 20th July 2023. Because June means next month 20th, na? So 20th July 2023 is the due date. But actually they are making payment on what? September 18. So from 20th July 2023 to 18 September 2024. Okay, because they are raising invoice somewhere in 2024, and 2024 only they can avail ITC. But basically, if you see the financial year, we should see the invoice date only as the financial year. We should not see when they have received as the financial year. We should see invoice only as the financial year. So invoice comes in financial year 24-25. That's why I said they can avail ITC in 24. That's correct. But here they need to pay interest from 27-2023 to 18-9-2024. So interest payable. Interest payable on what? What is the value here? 1 lakh and 18% GST. So 18,000 is the GST. 18% from when to when? 27-2023 to 18-9-2024. So you please calculate. In July there will be 11 days. August 31 days. September 30 days, October 31 days, November 30 days and December 31 days. Either this way you can calculate or easy I will tell you. 20th July 2023 to 20th July 2024, 366 days, 366 because February will come, 366 days. Thereafter, July only 11 days, August we will be having 31, September 18. So what is the numerator? 426 days divided by 366. So this is the interest that is payable. So you can calculate. Why 366 in the denominator? Because we are taking leap year 2024. As we are taking the leap year 2024, so in the denominator we need to take 366. So 18,000. Why 18,000? 1 lakh into 18%, 18,000 into 18% into 426 by 366. How much it will come to? 18,000 into 18%, 18,000 into 18%, not 1 lakh into 18%, 18,000 into 18% into 426 by 366, okay, 3,771, 18,000 is the GST, okay, 18,000 is the GST, don't calculate on 1 lakh, 1 lakh into 18% itself is GST, on the GST we need to compute interest, so into 18%. So again, this is a very good question. This can be tested in exam, possible, guaranteed, no doubt. So we completed this amendment. One more amendment is there. So let's see the next amendment. This amendment is related to blocked credits, that is section 17 subsection 5. So we have any goods purchased and any service received including works contract service for construction of an immovable property is blocked credit. However, we have 3 exceptions where the ITC is available. Exception number 1, if it is purchased by the supplier for providing the construction, so he can take ITC, or if the construction expenditure instead of being capitalized is charged to P&L, then also ITC available. And number 3, if that construction is in relation to plant and machinery, then also ITC can be available. These are the 3 exceptions. But plant and machinery excludes telecommunication towers and pipelines laid outside factory gate. Now what is the issue in this circular? That is, usually these telecom companies, they will lay down the optical fibers. So optical fiber cables they lay down beneath the earth. So for that they will be creating the manholes and duct pipes. So these manholes and one pipe will be made inside, and through that pipe only the optical fiber cable will be laid down, which will connect multiple areas so that the internet, broadband internet or fiber net internet and all can be provided. So this particular optical fiber cables for laying down, they are doing the construction of manholes and duct pipes. Can they take ITC or not? Moreover, this expenditure is huge. So can they take ITC with respect to this? That is this. So ducts and manholes are basic components for the optical fiber cable network used in providing telecommunication service. The OFC network is generally laid with use of PVC or ducts, and it will come under plant and machinery, because the plant and machinery excludes telecommunication towers and pipelines laid outside factory. This is not a telecommunication tower, even though it is used by telecom company, it is not a telecommunication tower, and it is not even pipeline laid outside factory gate, because it is not laid down. It's pipeline only, but not laid by the manufacturer. So for manufacturer only that restriction is there, but not for the telecom companies. So these are not being specifically excluded from the definition of plant and machinery, as they are neither in nature of land, building or civil structure, nor in the nature of telecommunication towers or pipeline laid outside factory gate. Accordingly, it is clarified that they can avail ITC and it is not blocked credit. So that is only what I have given. So what is that OFC network? Plant and machinery definition, clarification. Can they take ITC? Yes. So because it's not covered under the block credit. and it is used in the course or furtherance of business. So definitely they can take ITC with respect to this. Now see how we will get a question on this. XYZ Telecom Limited is engaged in providing telecommunication services and is expanding its network by laying down OFC, optical fiber cables, across various regions. The OFCs are housed within PVC ducts, and service or connectivity manholes are installed as nodes in the network to facilitate maintenance and connectivity. Like first a manhole will be there, and thereafter one pipe will be there to connect. Okay. The company has incurred significant expenses on purchasing these ducts and manholes. As they incurred significant expenses, definitely this will be capitalized and it will be coming under capital goods, because what is the meaning of capital goods under GST? Any goods which are purchased and capitalized in the books of the person who is purchasing it, then it will be called as capital goods. Now, you are required to determine whether XYZ Telecom Limited can claim ITC on purchase of ducts and manholes used in its OFC network according to the provisions of CGST Act. So, what is the answer? Can they claim ITC on purchase of ducts and manholes? Point number 1, that is, ducts and manholes purchased as per section 16 of CGST Act 2017. Ducts and manholes, ducts and manholes are capitalized and treated as capital goods, to XYZ Telecom Limited, and as the same is not covered under, exceptions, exceptions to section 17 subsection 5. Actually it is exceptions to blocked credit. Okay, exceptions to 17 subsection 5, and used in the course or furtherance of business, comma, IT is available. Next, second point, explain the rationale behind the eligibility of ITC on these items, referring to the relevant sections of CGST Act and the clarification provided in the circular. So, as per CBIC circular, these invert supplies, even though used for construction of immobile property, but falls under plant and machinery, therefore not restricted under section 17 subsection 5. Then third, discuss whether there are any specific restrictions under 17.5 that would prevent XYZ Telecom Limited. Yes, if XYZ Telecom Limited purchases goods or receives services for construction of telecommunication towers, telecommunication towers, because telecommunication towers is restricted. For construction of telecommunication towers, comma, ITZ cannot be availed. ITZ cannot be availed. If XYZ Telecom Limited purchases goods or receives services for construction of telecommunication towers, ITZ cannot be availed with respect to that. Okay. Next, number 4, that is, analyze the impact of XYZ Telecom Limited GST liability if these components were instead classified as excluded items under the definition of plant and machinery. So then ITZ cannot be availed, and if availed needs to be reversed, correct? Where instead classified as excluded items under the definition of plant and machinery, means if it comes under telecom towers, can they avail the ITZ? No. So if the same do not fall under plant and machinery, comma, it is blocked ITZ, under section 17 subsection 5, and if ITZ already availed, it should be reversed. If IT is already availed, it should be reversed. Okay, that is with respect to this. Then next, we are moving on to registration chapter. In this registration chapter, there is one amendment which is of September 24 exam itself, that is, physical verification of place of business will be done by the officer. When the officer will do physical verification of place of business for granting registration certificate, whenever you made application for registration without selecting Aadhaar authentication. Number 2, you made application for registration by selecting Aadhaar authentication, but you have not completed the authentication within 15 days. First, you made application without authentication. Second, you made application with authentication, but the authentication is not completed within 15 days. Number 3, you made application with authentication and the authentication is completed within 15 days, but based on risk parameters, officer wanted to conduct physical verification. In these 3 cases, officer will conduct the physical verification and will grant the registration certificate, and the physical verification should be conducted within 30 days from the date of application, and they need to grant registration certificate, otherwise it is deemed to be registered, that is registration deemed to be granted. Okay. Now this is the provision. So here, what is the time limit within which they need to update the report, that is physical verification report? So here, physical verification report should be updated at least 5 days prior to the completion of the specified time period. What is specified time period? 30 days. From application, within 30 days, they need to give the registration certificate after completing physical verification, which means the physical verification should be done at least 5 days before, and they need to upload the report of the physical verification at least 5 days before. This is when they are doing the physical verification before grant of registration. And what are the 3 cases where they will do? Number 1, you made application without authentication. Number 2, application with authentication and authentication not completed within 15 days. Number 3, application with authentication and completed authentication, but officer takes up for physical verification based on risk parameters. Then at least 5 days before the 30 days from the date of application, they should upload the report. Suppose if the officer is doing physical verification after grant of registration, yes, so what will happen? They will grant the registration and then they will conduct the physical verification randomly. They will conduct the physical verification. Whenever they have doubt, they will conduct. At that time, they should upload the report of physical verification within 15 working days after completion of physical verification. Within 15 days following the date of such verification, they need to upload the report. So just 2 dates you need to remember. If they are doing physical verification after registration, whenever they do the physical verification within 15 days, they need to upload the report. if they do physical verification before registration, the report should be updated at least 5 days before the specified date for registration, that is 30 days. Then one more point is that at the time when the officer is coming for physical verification, whether the person, the registered person or the person who is making application should be present, not necessary. For example, I am making application for registration for my premises. I am making application for registration for my premises, but I am taking classes here. I may not be there in my premises. Is it okay? Yes. Because the presence of the person is not required now. That is omitted. Previously, the registration shall be granted within 30 days. So, 3 cases: person failed to undergo authentication, or not completed authentication within the time, or based on physical risk parameters the officer is taking within 30 days of submission of application. So, they will do physical verification. Previously, in the presence of the said person is there, that is now omitted. Means physical presence of the applicant is not required. Now, the presence of applicant is not required for physical verification. Okay. This was an amendment for September 24 itself. Next, this amendment was also for September 24, but all these amendments were given. So, because usually from amendments questions will come, that's why. Then, what is the time limit within which the bank details needs to be updated? Generally, we need to update the bank details within 45 days, previous provision, but now they have amended to 30 days from the date of grant of registration. Previously 45 days, now they amended to 30 days. So, previously it was 45 days here, now they amended it to 30 days from the date of grant of registration, or date of filing first return, not due date of filing first return, before furnishing the details under section 37. What is section 37? GSTR1. GSTR1, not GSTR3B, GSTR1. GSTR3B will come under section 39. So, 30 days from the date of grant of registration or before furnishing the details. So, that is in GSTR1, that is before filing GSTR1, whichever is earlier. Whichever is earlier or whichever is later. Whichever is earlier, not whichever is later. So, 30 days from the date of registration or date of filing GSTR1, whichever is earlier is the time limit. Then, next one, system based suspension of registration. This is also a old amendment only. That is, whenever you know that there is a issue with respect to returns, your liability in GSTR1 is greater than liability in GSTR3B. So, automatically there will be a system based suspension of registration. Even whenever you have not furnished the bank details within this time, we have to submit the bank details within this time, and if you have not submitted the bank details within this time, then also that will lead to system based suspension of registration. So, see this, what are the cases where there will be system based suspension of registration? First case, so suspension of registration will happen by default. Okay. So, that is your liability in GSTR1, your liability in GSTR1 is greater than liability in GSTR3B. Means you reported more liability in GSTR1 than the liability what you have paid in 3B, or your ITZ in GSTR3B. This is one case. Another case, ITZ in GSTR3B greater than ITZ in GSTR2B. So, your liability in GSTR1 greater than liability in GSTR3B, or ITZ in GSTR3B is greater than the ITZ in GSTR2B. These are the two cases. Such other case as may be recommended by the council. So, the said person will be intimated, etc. Now, they have added one more, contravention of provisions of Rule 10A. What is contravention of provisions of Rule 10A? That is not furnishing. Rule 10A is bank details. Rule 10A is bank details. Okay. Not furnishing bank details within time. Not furnishing bank details within time. Bank details within time. So, this is also one of the reason for system based suspension of registration. Okay. Which means, so there won't be like automatically the registration will be suspended, and these are the reasons for suspension of registration. There are many reasons for suspension of registration. These are also the reasons now for suspension of registration. Moreover, it is like system based suspension of registration. Then so here what will happen? The said person shall be intimated in the prescribed form by sending a communication to his email address, and the said difference and anomalies are highlighted, and he is asked to explain within 30 days. What is the time limit within which he need to respond? 30 days. And if he is not responded, then his registration will be automatically suspended, and thereafter it will lead to cancellation of registration also. Then next, this is also an old amendment, September 24 only. Revocation of application for registration. First, our registration got cancelled because of some reasons. Our registration got cancelled either because we contravened the provisions or not filed returns, etc. Our registration is cancelled. Now we are making application for registration. What is the time limit within which we need to make application for registration? Previously it was 30 days plus 30 days, like that it was. Now they amended it to 90 days, and it can be extended for a further period of 180 days by additional commissioner, joint commissioner or commissioner. So previously it was 30, now they have amended it to 90 days, and it can be extended for a further period not exceeding 180 days, means 90 plus 180, 90 plus 180 days, okay. And this 180 days extension will be granted by either commissioner or additional commissioner or joint commissioner. Then next one, so this online money gaming person located outside India. So like betting platforms which are located outside India, so they have to get registered in India, and even if they are supplying to any person in India, they have to compulsorily get registered and they need to pay GST. So like lot of betting platforms are there, like 1xBet, Parimatch, and then even this Rummy Circle, many companies, foreign betting companies. So these companies, when they provide service to any person in India, the supplier, that is the betting company, online betting company or online money gaming company, is only liable to pay GST, so they should register. So supplier of online money gaming from a place to any person in India, so they need to get registered, and they, while declaring, like while they are registering, they don't have to declare their permanent account number and state or union territory, because basically where are they located? Outside India. Then unregistered persons, this is also September 24 amendment, that there is an unregistered person who want to make supply of goods through e-commerce operator. Generally, supplier of goods through e-commerce operator is compulsorily required to get registered. However, if they are making only intra-state supplies, then they are not required to compulsorily register. They need to register only when aggregate turnover exceed threshold limit. But what are the obligations they have? They should not make interstate supplies. Means they should make only intra-state supplies. Number 2, they should not make supplies through e-commerce operator in more than one state. Means they should be operating only in one state. Suppose if they are in Tamil Nadu, they should make supplies only in Tamil Nadu. They should not make supplies through e-commerce operator in Karnataka, within Karnataka, not like that. So shall not make supply through e-commerce operator in more than one state or union territory, and they should possess a valid permanent account number. First, they should not make interstate supplies. They should not be making supply through e-commerce operator in more than one state, means they should be doing operations only in one state. They should have a permanent account number, and they should get a unique enrollment number from the portal. They need to update the permanent account number, address and details, and obtain a enrollment number from the portal, and it will be one enrollment number in the state, okay. And so they should be updating that enrollment number with the e-commerce operator. Then only they can make supply through e-commerce operator, and as and when their aggregate turnover exceed threshold limit, they need to get a normal registration, and this enrollment number gets cancelled. So these are the conditions that we need to satisfy. That is mainly, they should make only intra-state supplies, and they should not make supplies through e-commerce operator in more than one state, and obtain UEN. These are the 3 conditions basically. Then this is an amendment for Jan 25 exam, that is risk based biometric Aadhaar authentication. I have given See, all amendments for September 24 or May 24 I have not included in my amendments material. Only Jan 25 amendments I have included for your quick recap. Okay. So, risk-based biometric Aadhaar authentication means, so previously Aadhaar authentication we will get a OTP, we will enter the OTP, but now we need to go to the enrollment center and they will scan our eyeballs, fingerprint, etc. and then only they will give the Aadhaar authentication. That is known as risk-based biometric Aadhaar authentication. We need to literally go to the enrollment center where, so previously that was applicable only in Gujarat, now they extended it to Puducherry and Andhra Pradesh. For 3 states, if they want to register in those 3 states, they need to undergo biometric Aadhaar authentication. Okay. So, wherein only after completion of the process laid down here under, they will be able to do. Okay. And what are the 3 places here? So, he need to carry along with him the Aadhaar card, registration, applic form, etc. and all. So, Gujarat already was there, now Puducherry and Andhra Pradesh. Then next one. So, related to place of supply, this clarification already I told you it is a January exam amendment, that is billing address, delivery address match. We will take the same address. Billing address, delivery address does not match. We will take billing address or delivery address? Delivery address. Related to that, there is one question, have a look into this question. Reliance Digital Limited, an e-commerce company registered in Mumbai, Maharashtra, sells electronic goods across India through its online platform. On 10th October 2024, a customer, Mr. Ravi, unregistered individual, placed an order for television priced at 1,20,000 and Mr. Ravi's billing address is Pune, Maharashtra, but he requests delivery of the television to his vacation home in Goa. So, e-commerce, unregistered person. Okay. Additional information, the GST rate applicable on television is 18. Reliance Digital has received several similar orders where billing and delivery address are different. For order placed by Mr. Ravi, the company issued an invoice on 12th October and television was dispatched on 13th October. First, determine the place of supply for television in this scenario based on the provisions of 10(1) CA. So, what will be taken here? First, as per section 10(1) CA, as per section 10(1) CA of IGST Act, it is IGST Act, not CGST Act, IGST Act, place of supply in case of sale of goods to unregistered person, sale of goods to unregistered person is location of recipient in the records of supplier, location of recipient in the records of supplier. Also as per CBIC circular, as billing address and delivery address, does not match. Okay. Also as per CBIC circular, as billing address and delivery address does not match. What will be taken as the place of supply in this case? Yes, because you will see billing address is Pune, Maharashtra and delivery address is Goa. So, billing address and delivery address does not match. POS is delivery address. What is the delivery address in this case? That is Goa in the present case. Goa in the present case. So, Goa should be taken as the place of supply. Okay. Next, number 2, compute the GST payable on this transaction and specify whether CGST, SGST or IGST will be applicable. Now, what is the location of supplier? Location of supplier is Reliance Digital, where is it located? Maharashtra. So location of supplier is Maharashtra and place of supply is Goa, and as per section 7, because section 7 deals with the meaning of interstate supply, as per section 7 of IGST Act. As per section 7 of IGST Act, it is interstate supply. As per section 7 of IGST Act, it is interstate supply and chargeable to IGST. Therefore, IGST payable equals to what is the value? So value of the television is 1,20,000 into 18%. 1,20,000 into 18%. How much that come to? 31,600. 21,600 will be taken as the IGST payable. Then next, number 3. Third question, explain the impact on GST liability of Reliance Digital if billing address and delivery address were same. As per CBIC circular, if billing address and delivery address is same, if billing address and delivery address is same, then POS is, so whatever address, only one address is there, billing address that is what is the billing address in this case? Pune, Maharashtra. That is Maharashtra. And what will be the nature of supply? And it is intrastate supply. As per section 8 of IGST Act, because location of supplier also Maharashtra, place of supply also Maharashtra. Then number 4, calculate the total invoice value including GST that Ravi would be needed to pay if the place of supply is Goa. So how much Mr. Ravi is required to pay? So total invoice value to Mr. Ravi equals to 1,20,000 plus 21,600, that will be 1,41,600. So this is the only circular that we have on place of supply, only amendment in place of supply. Then next, tax invoice. With this actually Jan amendments over. These are the only Jan amendments. Hardly, if you see na 12 pages including the questions we have completed. These are the only amendments for Jan. Now we have some more amendments, so that we will see, which was based on September exam. Threshold limit for e-invoicing. When a person is required to give e-invoice, so whenever they are making B2B supplies and if their aggregate turnover in any previous year from 2017-18 exceeds 5 crores. Previously it was 10 and now they reduce the limit to 5 crores. And for B2B supplies only, not to B2C supplies, the recipient should be registered. And what is the e-invoice? That is, normal invoice we will upload in the invoice registration portal and obtain 3 things. Number 1, invoice reference number, then QR code and digital signature. Then it will be called as e-invoice. Then applicability of e-invoice to government departments or PSUs registered solely for the purpose of deduction of tax under section 51. That is, when e-invoice is not applicable, even if your aggregate turnover during any previous year from 2017-18 onwards exceeds 5 crores, but in case of biggest, e-invoice is not applicable. What is that biggest? B for banking company, I for insurance company, G for GTA, another G for government department or local authority, E for exhibition of film in a multiplex theatre, S for a CZ unit, and T for transportation of passengers in any mode. Now, supply by government departments, e-invoice not applicable. Supply by government departments, e-invoice not applicable, but supply to government departments, definitely e-invoice is applicable, because all these biggest, G for government department, it is supply made by them, not supplied to them. Okay. So, whether supplies to government departments, e-invoice is required or not required, the registered person whose aggregate turnover exceeds the prescribed limit for e-invoicing is required to issue invoice for the supply made to government departments or government agencies, local authorities or PSUs, because they are registered, even though they are registered only for deducting TDS, but they are registered. So, definitely we need to give e-invoice to them, but supply made by them, e-invoice is not required. Then payment of tax, clarification on charging of interest under section 53 in case of wrong availment of IGST credit. That is, I have wrongly availed IGST credit. When I wrongly availed IGST credit, so what should I do? We need to compute the interest from the date of utilization of ITC, that is, whenever the wrongly availed IGST credit is utilized, from the date of utilization till the date of reversal. When the credit is said to be utilized, when the balance in ITC falls below the wrongly availed ITC, the wrongly availed ITC is said to be utilized. Okay. So, what is that? We need to see balance, the month in which the balance in ITC falls below wrongly availed ITC, that month we have utilized the ITC. But the balance in ITC, should we see only IGST head, or should we see all CGST, SGST and IGST head, for which they are telling you see all the heads, you see all the heads. So, since the amount of ITC available in credit ledger under any of the heads can be utilized, since the amount of ITC under any heads can be utilized for payment of IGST, it is the total ITC available in electronic cash ledger under the heads of CGST, SGST, IGST taken together should be seen for the purpose of calculation of interest under Rule 88B. Let us try to understand this with the help of an illustration. So, see this illustration. So, this illustration is related to that circular. IGST wrongly availed in Jan 2024 is 1,50,000 and balance in ITC is as follows: month Jan, Feb, March, CGST 20,000, 20,000, IGST 1,30,000. So, total, like that we have a data. In April 2024, such wrongly availed ITC, what is that month in which wrongly availed ITC? Jan 2024. This Jan 2024, whatever we have wrongly availed, we reversed in 23rd May 2024. However, for all earlier months, GSTR 3B filed by the due date, but for April month alone, we filed GSTR 3B on 23rd May. Compute interest if any. First to compute the interest, what we need to see is that interest will be applicable on account of wrong availment of ITC if the ITC is utilized. If the ITC is not utilized, interest will not be payable. So, when is it said that the interest is utilized? See the month in which, that is, see when we need to say ITC is utilized, see the month in which the balance in ITC falls below the availed ITC. What is the wrongly availed ITC? 1,50,000. Now, see Jan month. Don't see just the IGST head. If you see IGST head, it is 1,30,000, means balance came down, but don't see only IGST head. See all the heads, means total. See the total. How much is the total? 1,70,000. Means whether the balance in ITC for January falls below 1,50,000, no. So, which means we have not utilized 1,50,000 in January. Again go to Feb. What is the balance in ITC? Total balance in ITC 1,50,000. Whether the balance falls below 1,50,000 no, means we have not utilized in Feb month also. March 2024 the total ITC balance is 1 lakh, but wrongly availed 1,50,000. Whether the balance fall down below 1,50,000, yes. To what extent? 1 lakh, which means 50,000 we utilized in March 2024. Okay, so in April 2024 such wrongly availed ITC is reversed on 23rd May 2024. So therefore what we need to do on 50,000, we need to compute the interest from March month. What is the March month 3B due date? 20th April. So say this, month of utilization March 2024, because the total ITC falls below 1,50,000, and what is the extent of utilization? 50,000. So interest should be computed from 20th April 2024 till 23rd May 2024, that is for 33 days. Okay, so why 23/5? Because 23rd May only they are filing the GSTR 3B and reversing. So therefore 23rd May, 33 days. So interest will be payable at the rate of 18% on 50,000 for 33 days. Simple. Then next question, what if CGST credit is wrongly availed? So when IGST credit is wrongly availed, we are seeing the total. What if CGST credit is wrongly availed? See the CGST head and IGST head balance total. Don't take SGST total. CGST and IGST total we need to see. So see the next question. What will be your answer in the above case if CGST is wrongly availed instead of IGST and CGST is reversed? Now which two heads should be taken? CGST, IGST. Why? Because CGST can be utilized for payment of CGST as well as IGST. That's why they are asking us to take both the heads. That is CGST, IGST head alone. That is 20 plus 1,30,000. 20 plus 1,30,000, 1,50,000. Then 25 plus 1 lakh, 1,25,000. Then 10 plus 80, 90,000. So now if you see balance in ITC for Jan 1,50,000. How much wrongly availed? 1,50,000. Whether the balance came below? No. So therefore we have not utilized in Jan. Again Feb. Feb balance is 1,25,000. Wrongly availed 1,50,000. So balance came down, means we utilized 25,000 in the month of Feb. Then March. March it came to 90. So 1,25,000 to 90 it came. So that is utilized in March 35,000. How 35,000? 1,25,000 minus 90, 35,000 we utilized in March. So now we need to compute two interest. One on 25,000. From which date to which date? For Feb what is the due date? 20th of March till 23rd May. That is for the 64 days you need to compute on 25,000. And on 35,000 from 20th of April. So why? Because March month due date is 20th April. From 20th April to 23rd May, we need to compute interest at the rate of 18% on 35,000 for 33 days. Same way, what will be your answer if it is SGST credit wrongly availed? Again, take only two columns, SGST head and IGST head. Okay. So if IGST is wrongly availed, take all heads, CGST, SGST, IGST total. Suppose if CGST credit wrongly availed, take CGST head, IGST head total. If SGST credit wrongly availed, take SGST head and IGST head. Okay. If SGST credit is wrongly availed, take SGST and IGST, CGST, CGST and IGST. What if compensation cess is wrongly availed? As compensation cess credit cannot be utilized for payment of any liability, you should see only compensation cess head. Okay, that is this. So there is one point related to compensation cess, where the credit of compensation cess is available is taken into account. We need to see only the balance in compensation cess. Thus, the credit of compensation cess cannot be utilized. So we need to see only the compensation cess available, but not any other balance. Okay. Then we have this TDS and TCS one amendment, which is related to, now that is unregistered suppliers. Whenever there is an unregistered supplier who is making supply through e-commerce operator, that unregistered supplier should comply with certain points, that they should make only intrastate supplies, they should make intrastate supplies within the same state, that is they should not be making supplies through e-commerce operator in more than one state, and they should obtain unique enrollment number. These points are there now. Now the e-commerce operator should comply that the supplier is not making interstate supplies and the supplier is obtaining the unique enrollment number, and the e-commerce operator will deduct TCS or will not deduct TCS. They will not deduct TCS. Why they will not deduct TCS? Because the supplier is unregistered. Say this, unregistered suppliers are now allowed to make supply through e-commerce operator even though their turnover does not exceed the threshold limit. Okay. Rule 67 has been amended to clearly bring out that the details of TCS. So unregistered supplier of service are now they are allowed to make supply through e-commerce operator, and it has been amended to clearly bring out the details of TCS furnished by e-commerce operator in GSTR 8 shall be made available only to registered suppliers. So here, as the supplier is unregistered, whether TCS is to be deducted or not required to be deducted, not required to be deducted. Okay. Then next, returns. In these returns, here there are some cases where your GSTR1 will be blocked, means you cannot file your GSTR1. What are the cases where your GSTR1 is blocked? There are many cases. Number one, if your liability in GSTR1 is greater than liability in GSTR3B, then they will give a intimation in Rule 88C, and till the time you respond to that reply, till the time you respond to that intimation, you cannot file your GSTR1, that is blocked. Same way, when your ITC in GSTR3B is greater than ITC as per 2B, you will get a intimation in Rule 88D, and whenever you get a intimation in Rule 88D, till the time you respond to that intimation, your GSTR1 will be blocked. Plus, if you are not furnishing the bank details, also your GSTR1 will be blocked. Okay. Next, what is this Rule 88D? Rule 88D is simple. Whenever your ITC in GSTR3B is greater than ITC as per 2B, they will be giving you an intimation asking you to explain the difference, reason for difference, or they will ask you to pay the difference along with interest. If you have neither gave explanation nor paid within 7 days, what is the time limit within which you need to respond? You need to respond within 7 days, within a period of 7 days. And when you will get the intimation, when you have availed ITC in 3B, ITC in 3B exceeds the ITC in GSTR 2B, ITC in 3B exceeds ITC in 2B, you will get a intimation, and that intimation they will ask you either to pay along with interest the difference or explain the reasons for difference within 7 days. Within 7 days, if you are not responding, then they will initiate recovery. Okay, that they will give a notice and initiate recovery. So where no explanation is furnished, okay, then the said amount shall be liable to be demanded and they will recover this along with penalty. So these are the various amendments that we have with respect to this Jan 25 and even September 25 amendments are also covered in this. Okay.